Hi and welcome everyone. My name is Dan Schindler. We are Anders CPAs and Advisor, and we are here for another episode of PPP with Paul and Dan. As you may see, I'm not here with my colleague Paul, but rather my colleague Zach McDowell. The previous episodes have been mostly about PPP loans and related loan forgiveness. However, we're going to change gears a little bit here and talk about something that has not gotten the same level of attention as PPP, but is just as lucrative or more lucrative than the PPP. It is the Employee Retention Tax Credit, or ERTC as we will call it. This hasn't received the same level of attention as the PPP because before the passage of the Consolidated Appropriations Act in late December of 2020, businesses could not benefit from the ERTC if they had received a PPP loan. That has now changed. We will take this episode to hit the high-level overview and eligibility requirements of the ERTC. This is certainly something business owners will want to listen to. It could put tens or hundreds of thousands of dollars back in your business. Zach, why don't you shed some light on the ERTC and why it can be so impactful for some businesses?
Thanks, Dan. That's right. The Employee Retention Tax Credit is now available for businesses to take advantage of, even if they received or will receive a PPP loan. One important item to note, though, is the same payroll dollars can't be used towards both programs. In other words, businesses must allocate wages towards the ERTC or towards PPP loan forgiveness. This can bring in some planning opportunities to make sure businesses are maximizing both benefits. So due to the passage of the latest stimulus, the ERTC can now be claimed for 2020 for eligible businesses retroactive to March 13th, 2020. To be eligible for the ERTC, you must meet one of two tests. Have a more than 50% drop in gross receipts for a quarter in 2020 compared to that same quarter in 2019, or have your business fully or partially suspended by an appropriate governmental authority that limits commerce, travel, or group meetings. A couple of examples of a partial suspension could be capacity limits or operating hours restrictions, or your suppliers are shut down so you can't get supplies to operate your business. So once you meet one of those two tests, that determines your qualifying time period that you're eligible to claim the ERTC for 2020. The credit is a 50% credit on up to $10,000 in qualified wages per employee for the whole 2020 eligible time period. Also, the latest stimulus bill extended the ERTC through June 30th, 2021. It was set to expire at the end of 2020. Along with extending it, they made a few advantageous changes to the calculation for businesses. To be eligible for the ERTC in 21, you have to meet one of two tests again. First, if you have a more than 20% drop in gross receipts, so it's lowered from 50%, for a quarter in 21 compared to that same quarter in 2019, still using 2019 as your comparison period, or if you have a full or partial suspension again, same suspension test as the previous year. So if you meet one of those two tests, you have a qualifying time period in 21. The 21 credit is a 70% credit on up to $10,000 in wages per employee per quarter. So now you can get $7,000 in credit per employee per quarter in 21. And finally, the ERTC is a refundable payroll tax credit that can be claimed on your federal Form 941 filings.
Yes, thanks, Zach. That is certainly all great information. This is something we are very passionate about as a firm and recognize the significant impact it could have on businesses' cash flow. I know there's not enough time to cover everything on this, but hopefully these highlights are useful enough for business owners to inquire further. With that, we'll wrap up this episode and see you next week for another edition of PPP with Paul and Dan. Thank you for joining.